Cool. Awesome, everyone. Hope you guys are doing incredible well. We've got Ben, we've got Harry, we have Davey, we have Javi, and everyone today. Incredible, incredible. Cool. Now, what I'm going to do right now, I am going to share my screen almost straight away. Now, a lot of people, let me just see how can I share my screen. Nice. Awesome. So, hi everyone. Hope you guys are doing incredibly well. Now, today's session is going to be very simple. Today's session is going to keep it short and sweet today. We're going to talk about what's going to happen to the stock market right now. You can see crazy things are happening to the stock market at the moment. Really, really volatile at the moment. Some people say probably time's up right now. Um, and we're gonna recommend some trades at the end to see and also look at some of the trades that we recommended before. Hope you've done your homeworks as well. We're gonna go through some of your homeworks. Just put your spreadsheet right at the front so we can have a look to see what's gonna happen straight away. So you can see right now, it's the end of January right now. Stock markets, just before that, as I showed you before, stock markets, no matter what happened, historically, it's always going up big time. No matter what type of crash you've heard before, whether it's World War One, World War Two, Corona crisis, 2000 internet bubble, all of that, we've keep going higher and higher and higher. And yesterday, you will see we got a really nice crash down of the market, kind of like the past since Friday. Yeah, really coming down. I think yesterday was a trigger of the market kind of there going on a lot of spike down a little bit there. We talk more about the news and stuff like that kind of later on, but it's basically, I think China has launched an AI called DeepSeek, like just like that. Um, and apparently, like normally, Nvidia always use a lot of money. They always reinvest, use a lot of money to the reasons why our stock market has been going up so high right now is because we have this AI boom, AI boom kind of going on. At the moment, it's like last time we got this internet bubble, just 1996, 7, 1998 to up to 199, up to 2000, a massive internet boom kind of going on. And reasons why after Corona we have such a big boom going on. Can you see the Corona? Because we've got this huge printing of money kind of going on, and then there's a nice kind of going down there. And then now we have a really nice this AI boom kind of going on since 2023. So because Nvidia has been spending a lot of money to keep upgrading its technology. And then suddenly, I think 2 days ago, DeepSeek, one of the companies in China, suddenly launch an app called DeepSeek, where you do not actually have to spend so much money and you can get very, very similar result like what Nvidia used to do. So something like that. So that means because this is a new company, so it show that actually, to AI might not need as much investment. Yeah. So it's potentially showing that, you know what, is why don't I actually need as much money to achieve the same thing. So it's kind of shake the whole AI world at the moment, especially yesterday. Like here, AI index. If you look at the AI index, that means the whole AI stock just went down massively. And really very similar to this internet bubble, where in 2000, where are we? In 199, let me show you in here, like in 1995, 1996, 1997, 199, there's a lot of companies suddenly have these crazy high valuations. They're selling at 100 times this PE ratio, 200 times this PE ratio, really, really crazy high valuation. And then at the end of the day, um, a lot of these high valuations, the reason why a lot of people pump up so much is because everyone gets really greedy about the technology stocks at that moment. So even though internet actually changed the world, at the end of the day, for 10 years, these internet stocks just gone nowhere. That means from 2000 to 2010, it's literally gone nowhere. And yeah, so it's to show that sometimes chasing these AI stocks, chasing this internet bubble, once you really, really make quite, once it gets really high valuation, you kind of want to, take some of your profits a little bit rather than keep riding it because for 10 years it's just gone nowhere for this internet bubble. No matter what that is, whether it's Apple, whether it's Microsoft, Google, for 10 years, some of these stronger stocks just gone nowhere because the PE ratio of this internet bubble stocks just went up so high to 100 to 200%. And so even though internet actually changed the world, people still don't make as much money, you know, at that moment. Yeah, just because of the greed, because of the valuation has been driven so high at that moment. Yeah, from 1990 all the way to 1999 before we have this internet bubble kind of going on here. Yeah. And a lot of things happen, during that time. Even though things is true, Microsoft has been doing really great, Apple doing really great. We've never had all of that happen during the internet bubble. Everything is really, really well, but it's still crash. All of the stocks still crash big time. Yeah, same thing when we invented radio, stock went up big time and when we invented like cars, stock went up big time temporarily, all at that moment, and then later on it just crashed down like the world has never seen before. So just to show that sometimes new technologies sometimes might not be a very very sustainable thing where you can just like drive up like that big time. Yes, it will drive up big time. Um, just like what we see in 1997, 8, 9, and 2000, drive up big time. But you kind of want to be like mentally prepared that it might kind of come down in a really, really nice way. You know? So don't put all your eggs into one basket. Don't put all of your stocks into like, wow, let me just go all into AI. And then one day you'll be realize, oh, why is my stock down 20% in one day on the one month? Because all of your stocks have been concentrating on just fully AI. Yeah. Anyway, coming back here. So, is this to say AI is all fake and stuff like that? No. 100%, I think AI is really strong. It's going to change the world, in more ways than one. Yeah. But I wouldn't put all my eggs into one basket, just go all into AI. Yeah. So, and especially when you see the valuations being dropping higher and higher, like the world has never seen before, then you just want to be a little bit careful. Yeah. So and then and then if you go to DeepSeek and I think recently if you use the app and if you type it, if they actually use NVIDIA chips, I think they admit that they actually use NVIDIA chips in a secretive way. Yeah. Well, I'm trying to put that on. I'm just trying to log in as well. To show you when I ask that questions if they are actually using NVIDIA chips or are they actually using just cheaper chips. Cool. So let's come back to SP 500 right now. So we draw the second step, just drawing a trend line for a lot of new students here. So we're just going to show you how you draw the trend line. There is no 100% guarantee way of right or wrong to the way to draw your trend line. The only way is that you have to follow the criteria that we talked about the other day on our training portal. Yeah, just to make sure it's a lot of touches, wider time frame, as well as less steep. Okay, the three criteria. If you don't remember, you probably have to go back and watch it again. So, oops, why does it keep changing like that? We just continue, and then we're just gonna draw it like that. Just draw it like that. And there's always gonna be some news kind of happen and some crazy news. I told you before, there's gonna be crazy news we have never heard before that's gonna drive the market down. And you never heard of that news. Suddenly there's a corona, we never heard of it. Inflation, we've never heard of it. There's always some new things that's gonna drive the market down. Yeah, some new things. But anyway, so right now, this is weekly chart. So it's saying that the jackpot is going to be at 5,000. If the price comes out to 5,000, I will go all in. I will even sell my house to just go all in. Dollar cost averaging when the SP 500 is like, when the SP 500 reach kind of below 5,000 kind of line. Yeah, then go on daily charts. And I'm trying to draw my support line and all of that line. So I'm just going to draw my kind of line here. So obviously it's kind of bounce off our like this line a little bit, just bounce off here and bounce off a little bit here. This is kind of a weak trend line. I wouldn't be too fast if this trend line and stuff like that. This is a very weak trend line. Yeah, because it's very, very steep. The trend line that I will respect a lot will be the support line. Kind of anything below kind of this line will be quite nice. Just it's a 4-8 or anything just or another one just right here. Yep. This is support line bounce off here. This is a nice support line. Resistance line is anything above you right now. So if I'm gonna draw anything above you right now, would just be around there. Yeah. Here, coming back down like that. Yeah, probably form a triple top before it start coming down very nicely. Okay, now if we go on to investment indicators, so all of the investment indicators, we haven't really got any crossover up and stuff like that. So I want to probably just use Bollinger Band and we almost have the cross up. Bollinger Band is like a rubber band. Whenever we have an up there going on outside of your band, it tends to pull back in. Outside of your band, it tends to pull back in. Now, outside of the band, pull back in. Okay, so right now, what we are seeing right now, we are kind of in the middle of the band. So hopefully, get outside of the band and continue to kind of pull back in really nicely. Okay, so that's just based on your week 2 training, some really basic, really nice technical analysis, like you read 10% of it. Um, let's go through what is even more important right now. Just go to my website, click on the first one. Sorry, let's go to step 1 and then we click on step 2. Cool. So we're gonna go on fear and greed. We're gonna go on open insider, that one, and an AIM. So let's look at this real quick. So we are at neutral stage right now. In order to short, in order to short the market, we need to go to an extreme greed. Yeah, if you want to short the market, if you want to buy the market, it's an extreme fear. Normally, as a complete beginner, you wouldn't really do anything in neutral greed and fear stage. Okay, in trading and investing, it's not every day you have to buy something. You just go and click buy and sell. Yeah, a lot of people when they first started, they just go and click buy and sell all the time. If you remember the spreadsheet that I gave you, the only time you should actually react if you want to guarantee to make money is extreme fear. Okay, that's where you guarantee. And the only time, if you only act on extreme fear, I want to say congratulations to you because you're going to make so much money. If you're acting on when we are at fear, the greed, and all of that, if you're buying and selling at this stage of the economy, you have to pretend that you're going to lose some money. Okay, so that means you are not getting in at the right stage of the economy. Yeah, that means you are like this is the right support. You are like buying it here. Okay, you're buying it here rather than waiting until nice support to buy it there. Okay, use a spreadsheet that we gave it to you. We asked you to go all into the extreme fear and then fear you can buy. But if you really want to buy, you literally just buy your index. Okay. The guidance and everything that you've been doing, you want to go all in. Um, like if the guidance says buy, you want to make sure we're in an extreme fear stage. Okay. If you want to buy any kind of guidance that's going up. If you want to sell anything, you want to make sure we're in an extreme greed stage. Okay, this is the first step you're gonna do. Okay, if you want to buy anything. So, what are the rest of the stage and what do we do here? These 3 stages, what you do, you actually save money. Yeah, this is the time when you save money. You do your homework to find a lot of guidance, find those guidance that you have never, ever, ever, ever seen before. Okay, even if it's just 10%. It has happened all the time. It's not something big. Just forget about it. Okay. Unless we're an extreme fear of the economy. You don't have to buy every single day. If you're one of these people who buy every single day, every hour, every minute, it's just a matter of time. It's literally just a matter of time. If you make money like that, I want to tell you that you want to use a psychology. Come in with the psychology. If you make some money on the greed stage, neutral stage, and fear stage, I want you to have the mindset that you are actually lucky. And if you're very lucky, take the profits that you make and put it into your share dealing platform. Share dealing platform is a non-leverage platform. That means if you're using non-leverage, if you buy some strong stocks, eventually you're gonna make money. If you hold it long enough, you're gonna make money. Okay. And if you're using some leverage platform, however, though, you have to be very, very good in your timing because if it goes up, you have to be very precise. You have to be like, wow, it's going up this minute, this hour, this second. It's not everyone can do that. Not everyone can do that. You can only do that if the guidance is something you've never seen before, you really use seasonality big time, and your technical analysis is quite on point as well. Yeah, your CCI, your stochastic, and all of that is on point. You really aim your support line. So that's kind of like, but even so, if you make money doing day trading, doing a lot of leverage kind of trading, you really want to take your profits and put into your share dealing platform. Yeah, if you're using on fear, neutral, and greed stage. Where's the spreadsheet? Where is the let me just show you where is the I'm gonna find the thing for you to look at for each stage of the economy. Let me see if I can find it. For each stage of the economy, what should you be doing? You should actually print this out and put it in front of your wall. Before you buy and sell, you actually 100% got to do this first. So let's see if I can find the spreadsheet. What can I tell you? Just give me a second real quick. Oops. I'm going. Where is it? Let me see. Introduction. I'm just gonna find that spreadsheet real quick for you. Where is it? Let me see. Let me see. Mention crises. What should I'm just looking at recording right now. Gosh. Okay, let me just click on it. It's gonna be at here. Wow, we got it. Cool. This is it. Yeah. Really powerful, really important. If you don't know what to do, this is so important. You actually should screenshot this many times. So we are at neutral at the moment. We recommend you to do nothing. Enjoy your wins if you bought at the bottom already. Okay. So you don't have to buy and sell every single week, even though we are recommending some watch lists and stuff like that every week, because I have to go through your homework. I have to make sure you are using the right thing. So even though I'm going through your homework, you should only act when we are 100% at the extreme fear stage. Okay, below the extreme fear stage is where you should really act, and as well as extreme greed stage. The rest of the stage of the economy, unless you've seen like really some jackpot guidance that's like we have never ever seen before. You do a lot of analysis, you read them really nicely. Now, fear, you also don't use leverage. There's no leverage here. If you want to use, you can use 10 to 20% of your total capital to buy the index. Dollar cost averaging starts here. Okay. When in extreme fear, this is where you can actually use some leverage. Okay. During only an extreme fear and below that. Yeah. So we are at the neutral stage at the moment. You actually do nothing. You just enjoy your win. Just do your homework. When you're in extreme greed, a lot of the leverage stocks that you've been doing, you want to like take your profits out and stuff like that. Yeah. So this is just too important. Okay. If you want to kind of like make some great money, This is it. You got to follow this. Yeah. If you don't lose any money, if you're not a person who likes losing money, you already make a lot of money, you want to retire, and you just make some extra money, you don't lose your money. This is also the formula that you've got to kind of remember. Yeah, really important. This is a formula that I actually stand by very, 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 very strictly. Okay. Just to let you know right now. Cool. So let me take a screenshot. Alternate. Okay, done. Cool. So what I'm gonna do right now, we're gonna go back to okay, there's a training portal. I'm literally trying to find that. So where are we? So we're gonna go back here. Okay, so now let me continue. So fear and greed right now, we are at neutral stage of the economy. We will go all in. We will start acting when we are at fear stage and extreme fear. That's really important. Yeah, that's where you really start buying kind of there. 19th of like December. Okay, you'll be buying just right there. 19th of December, just right there. If you want to sell, we just when we reach like extreme greed up there. Okay. So this is the stock price, strength, breadth, put and call options. As you said, the really good time that I will actually start to buy is when I see the put means a lot of, okay, put means a lot of people are selling. I want to see here is the time to buy. Right now, not there yet. If anything, a lot of these times, this is actually a time to kind of sell your stocks. Kind of here. So we're kind of close there. Okay, okay. So market volatility, again, very similar. We want it to reach this upper line. We are not there. Higher market volatility really means that it's a really good time to buy at the top. Right now, we haven't seen the huge spike yet. Very, very unfortunate. We haven't seen the huge spike yet. Okay, okay. Now, if I go to Open Insider, what is this? If I go to Open Insider, let's go to charts. We haven't got a crossover really nice. If you go crossover, wow, that would be a lucky day to start buying. If I go on like here, SP 500, just look at what the sentiment is doing. I draw it last time. I'm gonna draw it one more time. So you can see where we every single time when we reach like hmm, how do we draw this? Okay, when we reach here, you see, yeah, the market tends to go up really nicely. When we reach here, the market tends to go up really nicely. When we reach here, the market tends to go up really nicely. When we reach like here, the market goes up really nicely. When we reach here, market goes up nicely. So that's what the market's been doing since today. Market goes up really nicely when we reach the higher line. What about at the bottom? Let's have a look. When we are at like the bottom stage, let me check. Okay, when we kind of like at the bottom stage right here, when we reach like 30% of like sentiment, the market tends to come down nicely just right there. And a little bit here, like very close here, but not there yet. And then the last time when we have it is just right here, and the market did came down nicely. So yeah, so we are reaching here compared to here. Okay, interesting. So it's saying that, yeah, so that's how you analyze it. Now, NAIM report, wow, still the same as last time. A good time to buy, as we show you from last week, is here. It's a really good time to buy. Here is okay buying as well. You can see here, yeah, it went up here. Yeah, it went up. So here it did went up. Okay. So if you really want to sell, you want to come in, make sure this is a selling line. That's a selling line. So this is okay buy, but it's not as strong as this buy. Okay, this buy will be really, really nice. That is okay buy. I probably presume it's gonna spike up a little bit before it start coming back down like that. Okay, cool. So it's kind of in the middle for that one. And okay, seasonality really powerful, really important as well. So let's have a look real quick to see what's gonna do. So we talked about that before, and in the first week of January to the second week of January is the only time when the market come down. Okay, and it's true, including these years as well. This has been the past 15 years average. Okay, and the end of the year is been going up really nicely, and that's literally what happened to the market. It's been going up really nicely. Now we are reaching February right now, probably tomorrow, the day after tomorrow, probably next week. You will see that we still have a like some nice up to the middle of February. That's where you want to run away. Okay. If you if you still use a lot of leverage, you're using IG a lot of leverage, you're using CFD account a lot of leverage. Wow, that's when you want to kind of like be careful a little bit. Okay, because we are almost there would be a time where, that's kind of what happened. If you really want to go all in, it's just right there, kind of middle of the March. Okay, so let me continue. Similar here with January time, we have a spike out at the end of the month. That's what we are actually seeing right now. And then we're gonna have a nice first week of February, it looks like, it seems like, till the second week, probably just near there, and it's gone. I'm looking at this line, the 15 years line. Okay. And yeah, so everything is very similar to that. So we are on what year? I think it's when of what year? First year. Second year, so the market crash come. So this is the election. This is like next year. Like this year, market will be very turbulent. It's very volatile, up, down like that. Yeah. And last year was really good. The year before was also really good. So these 2 years, this year and the next year is where the market's gonna come in. The market crash, I personally think that if there's a big one, but this year I think it should be okay. Okay, so that's what we are seeing right now. Okay. So, oh, Raven, how do but if you're using a lot of leverage, though, if you're using a lot of leverage, any kind of news that happen, like, like a lot of people make a lot of money on Nvidia when DeepSeek suddenly came out, but there also a lot of money who cannot withstand the 20% drop. Just imagine, yeah, 20% drop of Nvidia. Let me just tell you what actually happened. So let me just put into perspective so that you know. We haven't gotten the 20% drop of Nvidia is things we never ever seen before in history. Yes, it's never seen before. It's actually the largest that we ever got. Nvidia dropped 20%, actually 16% drop like that. Okay. Now it's not big, but 16% drop is like, let's call it 20% drop. It's like you have £100, £20 is gone if you're using share dealing. Okay. If you're using share dealing and this time you have 20% gone, that's absolutely fine. So you basically come back to where you were 6 months ago. Okay. If you bought Nvidia in 6 months before, you come back because it go back to the June prices. Look at the bottom, it goes back to June prices. So you have a 6 months worth of discount. If I want to buy some stocks, normally I want to have at least 1 year of discount. Okay. So you have 6 month worth of discount. So that's fine. So that means, but if you're using leverage, if you're using CFD, that means that if you're using 2x leverage, for example, on eToro, you can change into 2x leverage. That means rather than 20% drop, you actually have a 40% drop. £100 would have dropped to like 40% drop. 2020, it would drop to like £60. Okay. But obviously, when you make money, you make a lot of money. But I want to show you the potential lost because I think it's important to show you the loss because A lot of people are pensions right now. We have students who are make a lot of money, multimillionaires right now. You just have to build a wealth increasingly and reliably. So making money is very easy, but it's more important to count the lost. Yeah, when I get into a trade, as much as I think how much money I'm gonna make, I know I also want to count how much the worst case situation is gonna be. Okay, but we've never really have 20% drop like that. Never really. Normally it's just like 1, 2%, 3, 4, 5%. But 20% drop is the news like really shaken the world. All the AI stocks gone down big time. Meta, Microsoft, all the technology stocks basically went down big time. So that means if you use leverage on that day, when the market went down 3%, S&P 500 crashed literally 3%. The last time S&P 500 crashed 3% is like, I think it's like during inflation time. It's like 2 years ago. Never really happened like that before. So during that stage, if you are on the right position, then you are very happy. If you're in the wrong position, then using huge leverage like that is going to be very tricky for you. So as I say, if you want to build your wealth increasingly and reliably, you don't really have to use a lot of leverage. You can use trading to want to without leverage, share dealing. But if you really really want to use some leverage, you can like maximum is like 2x leverage. Okay, just pay attention to that. And in each eToro, you can change your leverage into 2x leverage. Okay, especially when you are getting into a trade when you are not in the right economy, dude. Like the right economy means you're in extreme fear and fear. If you're getting into the trades when we are in neutral, please, like, yeah. So make sure you are in the right stage of the economy because the chances are if you get into trade at the extreme fear stage, if you close your eyes, you will make money as well. Any stocks that you get into. Okay. And you combine with guidance, it's just incredible. Yeah. So when we're in an extreme fear stage, no matter what the guidance sees or is telling you, don't short stocks, okay? So shorting is a very, very dangerous sport. So you want to do it in an extreme greed stage, okay? That's what happened. Where are we right now? So like last week, we recommend some trades. We recommend some trades. Last week, we make it very, very flexible. Last week trades, you got to do a lot of homework. Like for example, we recommend like Compass INC. We say buy Compass when they expect to be in the range 1336 compared to the previous forecast 1.23. So there's a little bit up. And we ask you to go back to see if it's increased or not. So if I go to Compass INC, where are we? Yep, Compass INC. Since last week, I'm not supposed to show you like that, like that. You're supposed to get in when we're in an extreme fear stage. You're not supposed to get in when we the seasonality say yes. You check equity clock, or you go to my website to check if it's nice. If it is nice, then you just do it. Okay. And otherwise, you just don't. Like Seco full year revenue and expect to report in the range to see. So a lot of students make a lot of money on that once as well. So congratulations if you got in after you do a lot of the work, okay? And SQL environment, you have to check the seasonality to say yes. Okay, let me check seasonality with you right now. Go to my website to see if they got it. Sometimes it might not be if it's a new company, but let me have a look. So just go on here and click my website, just from there. And I'm gonna type like Compass. Let's see if it comes out. If it comes out, that means it's your lucky day. If it doesn't, this one. Where are we? Is this what is this our same company? Yeah, and you can see at the end of January, you will see that things spike up really nicely till the first week of February. Then you'll be like, okay, this is okay, not too bad. Okay, that's how you check seasonality. EOS energy. Let's look at this. Sometimes we have it, sometimes we don't have it. If we don't have it, then we go to equity clock. So it's fine. So let me just click on that. Go to EQUT. Go on charts. And then just type EOS. Okay, US energy. If they don't have it, then then it's not, then you skip it. Evolus, let's have a look. Yep. Evolus, okay, January like that, February like that. So Evolus looks 30%. Please go back and see if that Evolus looks okay, seasonality wise. So if you bought it last week, what's gonna happen? Okay. Evolus, if you bought it since when we last speak, you should make monies as well. Yeah, it went up quite nicely since last week. Went up Tuesday when we recommended it. Just go on like that as well. Yeah, you want to check like that. Argentex group. Let's see. I'm showing you how to check right now, but you should do the work. A lot of people just go all in. Like I literally we say buy, they just go all in and click the buy button just like that without doing any of the work. And then they'll be like, oh, Raven, why doesn't he go? Like, I want to keep it very open as much as possible. At the end of this session, we are literally just going through students' homework, and a lot of them are complete beginner. Yeah, I never do a lot of like this analysis. If you can't find Argentex, you call it a day. So you're gonna go to the next one. Go to SQL. SQL environment. Look, SQL environment. The last week is going down. Type in the chat box, should you buy SQL environment if it shows you that in January time is doing this? Type in the chat box right now. Buy or sell. Type in the chat box. Would you go all in and sell your house to buy this or not? You wouldn't, isn't it? Would you? Would you or not? So nothing. Wayne say nothing. Can we have a WhatsApp group possible? Absolutely not, Theo. David, we're fucking, we have Nora, do nothing. Absolutely, do nothing. Yeah. So even though we say it's like, oh, potentially, it's buy and stuff like that. But if you do the homework, you say it's not buy. So even though we say it's buy here, you shouldn't buy because our strategy, the four-step strategy that we use, one of the steps is to check historical rhythm. And if it's not good, you call it a freaking day. Okay, just to make sure you know exactly what you're doing. So if you don't buy, if you click the buy button, would you make money or not? Let's have a look. Probably wouldn't. Yeah, it just went down exactly like what the rhythm is telling you. So you wouldn't have clicked your buy button. Make sense? So today we're going to recommend some trades as well. Today is 29th of January, 28 actually. 28th of January, 29 probably. Anyway, let's start now. The first one. We're going to go through your homework right now. We're going to recommend some trades. Remember, you have to do your analysis. We are just going through people's homework. Okay? We are literally just going through people's homework. What analysis should you be doing? First, you should be looking at what is our fear and greed are saying at the moment. Okay. What is the open insider are doing at the moment? Okay. And then you want to go through the historical pattern, like Moderna, say short. Then you click Moderna, 15th of January. You literally go to my website and you type the same thing to look at what is Moderna always do in January. Okay. If it is going down, then you short it. If it is not, like that, this is Moderna. Moderna says that it's going to go down for 1 week and then after that, you will go up. Tell me, even if you say short here, would you have short Moderna? Type in the chat box. This is what you see, you know, on 6 years average. Moderna always doing that in the 1st of January. Would you short Moderna right like that? It's going up at the end of last week like that. Would you short Moderna? Type in the chat box right now for me, please. Because some people literally go hard in when they what's that called? Where is our beautiful Y? Let me see if it's here. Bailas Y. Where's Y? Henry, Kali, we have Nora, we have Sanjay, we have Victor. Y is it's not here today. Okay, it's cool. But for those who are listening right now, just remember to go through what we're going through. Okay. So everyone says no, well done. So don't just click the button, even though we are recommending some of that. Do not just click the button. Okay. Like Alpha Tech. Alpha Tech BP Zoomia. Let's go to Alpha Tech real quick. Actually, let's go to Salaris. Salaris. Yeah. So if you want to show, you want to make sure things are going down like a rocket. If I can't find it, then it's fine. What about this Alpha Tech? You know, you know. So again, here, January, a bit tricky. The first week is very good, and then the second is just like that. Go sideways like that. Let's go Moderna first. Moderna. Can you see? It's like a season like happen again and again doing the same thing. We talk about last week is gonna go really well. That's what happened Moderna last week going well. 1 week going down, literally following the mirror image of what happened that what we just saw on Moderna. Okay. So just make sure you are doing the strategy, you're doing the work, and not just close your eyes and click your button. Remember, we are here to teach you how to catch the fish yourself in a beautiful way. 17th of January is always going sideways for this guy, Alpha Tag. So here you can see almost in the middle of it as well, just going sideways like that, up, down, up, down, up, down like that. Okay, cool. So some people are like, oh, wait, is that 100% like, can I follow like historical pattern 100%? Well, if life there's 100% tomorrow is going to rain, life will be easier. But in life, there's no 100%. It's a probability game. So you want to make sure the odds is on your side. So you want to do a lot of these things, making it. Okay, let's look at homework right now. Now, a lot of new students, this section is the part that you won't be able to understand. Okay, so because you are just finishing week 2 videos on your video training. Okay, sometimes people are desperate, they want to come to the training straight away. So we just say, oh, okay, you can come. But this is a training you won't be able to understand right now. So let me start. Okay. So basically this part of the training we go through to look at what the company actually is doing. We read their analysis, we read their statements. Okay. So let me refresh this page. Do, 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 do. This is a Excel sheet. If you want me to look at the homework, you literally just upload into this sheet, okay? And you put into the first page. So let's see. So we've got some 2853. You can see 53 is probably the lowest that we ever got. And so it's kind of like a sign for reversal. Yeah. Now, let me just show you a little bit. This is a sentimental part. You always record yourself. Look at the last time we got is 54, 23rd of December. Guess what happened on 23rd of December? 23rd of December. Okay. And then suddenly we've got one more time that it happened here. 28, just like that. 53 again. 28th of January. Let's have a look. Guess what happened? I hope you know it without me saying it. I would say that actually was the time 20 what? 23rd of December. Sorry, 23rd of December. Okay. So when that was at there, the market actually came down right there. Let me just go through and have a look again one more time. So it's always 59, 59, 59. And then suddenly it went down to like 54, 23rd. When the short is at the lowest. The short is at the lowest. The market come down really nicely. Okay. So 28, this is in what? This is like what about 27? 28 was like, yeah, the market did came down on the 20 which is 27, just right there. So the market did came down there and then. Okay. If you want to buy, if you want to buy, you just want to aim for the highest. Some people like, oh, Raven, should I buy? Should I buy? Like, I want to buy Nvidia. Is it cheap right now? Can I buy it right now? Well, Look at when it's the highest. So let me have a look right now. When it is the highest. So it looks like wow, it's crazy. Let me look at this then. When is the highest? Would just be, I think 79 probably would just be the highest there. Okay. 5th of December, the highest, 79. Okay. 5th of December. Where are we? 5th of like December. Okay, obviously there's Wall Street. So let's go to Wall Street then. Do. Wow, it's crazy, crazy times, crazy times, crazy times. Wow, that's the highest just right there. A lot of people are shorting. So we want to look for the highest here. And then 58, 50, and then long 66. Okay, I think I know how to read now. So basically, I think 67 is quite high here. 16. Go to SP 500 real quick for me. 16. Two. Raven, what are you doing right now? What I'm doing right now, I'm showing you when it is more likely. We actually need a little bit more data because it's just December time. So the data is not really sufficient. Yeah. But you can see 16, 17, 18, especially 18 is where when it is the highest like that is when the market bottom. So you want to, if you want to buy the market, you want to make sure S&P 500 long is on the 67% long because on the 18, the market starts to bottom just right there. Can you see the 18 just right at the bottom? 18th of December. The market bottom just went up really nicely just right there. Okay. Can you see? 18 just right there. Yeah. So right now, if you really think the market is going to go, so how do you get this number? So let me just show you. You go on client sentiment and you start to plot. So right now it's 54% short. So you are putting what? I'm not entirely sure where you get a number from. Why is mine 54%? Where do you get a number from? Let me have a look. Please get your number from here. Okay? Just click client sentiment. If you have a live account, you should see it. Just click 54%. Okay. So as I say, if you're 54% is still on the 23rd, it's still kind of like on the shorting side. Okay. In the middle side, I want it to be like 67 if you want to buy. So it's not on time to buy yet. Let's look at Wall Street. See what's the percentage right now. Client sentiment is 70% short. But we never really got anything 70% short. Okay. Interesting. If it gets to like 79% short, then market's really gonna come down then. Okay. Because last time when we get to 79% short, the market actually start to go down. Okay. So what is the conclusion here? The conclusion here is that try to plot it every single day. Use your own spreadsheet. Don't use this spreadsheet. I think you have to use your own spreadsheet so you can see it properly. Okay, use your own spreadsheet. This spreadsheet is not too accurate. So basically, when everyone is shorting 79, it goes to the outlier. That's actually a time to short. Okay, that's actually a time to short. When it is like everyone else is longing, like can't really see it properly, but yeah, 79. So right now it's only 70. So it's still a little bit more left. As I say, in the middle of February, that's probably the time to start shorting the markets. Okay. Anyway, let me come back right now to our homework. Sarah, beautiful Sarah, let me see your homework. Sarah, you're supposed to book for your one-to-one. RTX, let's have a look. Let me see if you're using Outlook right now, yeah? Reported. See, so let me see your calculation here. So 6 minus 5.25. Where's the 5.25 from? I saw your 6, well done. But where's your 5.25? Okay, it's okay. Divide by, and then 5.25. Adjusted sales for 14% whole until end of Feb. Okay, interesting. Looks good. Looks good. RTX. Full year. Okay, 5.25 is from 2024. Okay, beautiful. Now, I want now because it's a different year. One is 2025, one is 2024. Because it's a different year, so I would buy this with a grain of salt. So RTX buy because compared to 2024, 2025, it went up 14%. However, you have to go back, you have to go back to 2023, 2022 to see if it's increased more than 14%. And how was the stock? Okay. So if the stock went up, even though if it is less than 14%, then it's a good buy. But if it is more than 14%, the stock didn't do anything, then it's not a good buy. Okay. First one, RTX. Yep, only hold buy till mid of Feb from what we see there. Next one. Oh, beautiful. I think you know how to do it now. Well done. Let's get SoFi. Percentage 36%. Wow, beautiful. So it's going to be 0.25 minus 0.39, 36% drop. Okay, so we might look at this. And it's not, okay, let's say if you short on 27th of February on SoFi, were you going to make money or not? So if you short on 27, well, you're actually going to make, okay, 27, 28 is here. Today it went up 0.44%. SoFi, the weekly chart, okay, it's kind of in the middle. Okay. I love that you put your things here. So we have a deep down. I think, okay, I'll put short. I'll just put short there. You have to check your seasonality yourself. Short because it went down 34%. Okay, I trust your number. Can you see? How can you say my recommendation and stuff like that? All of these recommendations are from students. I literally just trust the number. So 0.25 minus 0.39 implies, which implies, okay. So these are using the same things as well. So I would copy and paste this and put it on here. Okay. The reason is the reason is because of what? The reason is because now it's different year, 2025, 2024. So we look at its decrease 36%. What you've got to do, you've got to go back in time to look at 2022 if it decreased by 36% as well. If this has never happened before, that is a really, really good short. But if last time decreased by 80%, would you have still short? Probably not, especially if decreased by 80% if the stock went up. All right. Really important. Next one. Where are we? This is contact. This is 14. Okay, so you found two. Okay, well done. Better than nothing. Well done. Doing really well. I'm so happy that you know how to do that now. Royal Caribbean. Let's see your percentage. Where's the percentage calculation? Here. Nice. So 14, this very clear. Nicer, you make it so clear. Minus 9. Where is 9? Hmm. I think you go through here. Okay, 9 is last year. So you want to have another year. So now increased by 51%. As you can see, last year increased by 200%. So it's to show that this year the up is not huge. Okay. One thing that will be nice to show the seasonality chart. Okay. So you know whether we should buy or not. Royal Caribbean. Let's have a look. Wow. Beautiful. Beautiful. So since 28, I think it's today, 28, yeah. So let me read it. Adjusted per share, poll 13.37. Full year 9.5. Up 1.25 a year ago. Q4. Okay. So let me read it from here. 3.78, 4.89. Last year and the year before. Okay. I'm not entirely sure if it is 3. Make sure you look at the full year. I don't actually think it's gonna be free. Is it gonna be free? I like your calculation. It's actually really beautiful. So look at this company, yeah, Royal Caribbean. So they are basically saying that they are increasing their guidance to 14. It used to be 11. It used to be 11. This is a full year. It used to be 10. It used to be 9. Okay. And then so it looks like every quarter, these guys literally just raise their guidance. They have the habit of doing so because they already say, you know what, full year, I'm going to make 3 million. And then full year, they're going to make 4. Full year, they're going to make 6. So they always keep increasing their guidance. Mm. So the right calculation that I will do, I will, nice, well done for adding on that. The right calculation that I will actually do, I will use 14.35, probably just minus that. So I will see the number is like up 1 point. Okay. And then I will use like 10.7 minus this 9.5 as well. And I will use 9.5 minus a 6. So the difference will not be that big. But I like you how you do it though. Yeah. It's just the way you calculate all the way to the end there. Mm. I would just calculate like minus 14 minus 11 and then 9 minus like 6 and take it from there and having a little bit more. Okay, well done. That's beautiful. And 4 to 3, 4, 3, 3. Okay. This is already at all-time high, isn't it? Royal Caribbean. Wow, beautiful trade. What about the PE? The PE was at 24. Historically, it looks like the PE was at just pay attention to a lot of these trades like that. Yeah. We call it the turnaround trade. Look, they lost money and then suddenly they turn around to be making money like that. Coinbase was like that. Robinhood was like that. It was went up really nice. This is called a turnaround stock. These kind of things like that, you make a lot of money. If it turns around like that, this is the time you want to start buying. So it just gone up like that really nicely. Yeah, turnaround stock. Lose money, lose less money, suddenly start to make money. Okay, just pay attention to stocks like that one time. This is beautiful. 16 Royal Caribbean. It's doable. Let's just do it. Royal Caribbean. Um, Why? Because it went up how much? 24%. 24%. But I recommend you to same thing. You have to go back to see if this is in big or not. Okay, 34, 24. Okay, you have to go back more quarters to see if this 24% increase is ever happened in history or not. All right, next one. Beautiful, Nora. Let's have a look. General mode. So let's see. So the calculation is from what? Let me look. Adjust the 11 while consensus, adjust the earnings pack, compare with 11 minus 10, yeah. Where's 10? 10 is probably last year. Yeah, here, final 2024 guidance. Okay, so it's 10%. And January is actually like that. And it went up February time for 1 week or two. Okay. And the next thing I have to look at is I want to see if this 10% increase is huge or not. Okay. So I need to see more in the past. So if you can provide me one more year, 2023, wow, that would be so dream come true. General mode. Okay. Like that. So without the need to say, if I provide one more year, you will see that it's actually not increased by 10%. Last time, it probably is not as good as now. But you can see January it just went up, went down like that. What we've got here, let's see. January time. Okay. Okay. So just to make sure you guys know exactly what you are doing, I'm gonna go back in time to show you what happened last year. Okay. Now we have 2025 now. I love this. We have 2024. So what I need right now, I want 2023. So you want to compare between three. Normally, if you just compare like that, you will be like, oh, let's just buy. But if you look at it carefully, you will see adjusted before it's packed at compared with 2014. If you look at it, in the previous year, the EPS jumped 38%. Can you see? They told you already. I don't even have to do the work anymore. They told you. So this year, however much, in the previous year, adjusted EPS, which is really important, jumped 38% year over year. So this is last year. So they told this year is 10%, but last year was 38%. So obviously it's less than this year is less than last year. Adjusted earning before interest and taxes is pegged as 11, is pegged at compared to 2024 figure as 14. So this year is pegged at 13.7. Last year was 14.9. That's it. So it was not a good buy just because we don't, just because of all of that sentences. Okay. So what about this adjusted earning? And this is adjusted EPS. Jump. So I think in 2023 is even lower. Okay, let's look at 2023. I'm going to type general motor investor. Normally you should know how to do this yourself, but I'm going to show you now. In the later training, you're going to learn it. For those who don't get it, that's fine. But I'm going to show you. So basically, what you do, you click on investor, and then you click on what? Shareholder. You click on SEC filing. See all investors news. We won last year, 2000. Okay, this is release full, 28th of Feb, 28. So I'm gonna go to 2023, same time, 28. Probably gonna be 7. And I go in here, 28. Invest, declare, fourth quarter result guidance announced. Okay, let me show you. I think they provide really clear guidance. So see if they got it. What is this? Where's the guidance? Result overview. Where did you find the guidance? Okay, guidance reconciliation is 10.5. Was actually, are we looking at the same thing? General motto, general motto. Just give me a second. Let me just have a look. This guy is general motto. Okay, general motto. 8.7 net income. What about that? Net income 10, 11. EPS 10. How come adjusted? Do, do, do. Okay, where's the guidance? Expect operation full year. EPS adjust expect diluted 6. This is it. This is what we're looking for. 6. So would you buy? Like, let me just write that for you. You know, 2023 is 6 EPS. 2024 is 10 EPS. 2025 is 11 EPS. Would you buy on 2025? Would you like scream and like buy 2025? You wouldn't. Why? Because in the last year, in 2023, it increased by 38%. It says here, it increased by 38% year over year. Right now, only increased by 10%. Everyone write that down right now. When you are comparing, you want to have at least 3 years to 4 years of data. Write that down right now. You want to have at least 3 to 4 years of data. Okay. Very, very common mistakes. Everyone would have to write that down because you're going to do this all the time. Next one. What is it? So if anything, this looks like a good short because we've never really had that happen like that before. General motor is at the resistance as well. Let's see. Yeah, it's very much resistant lines there. Just very similar to Tesla. High resistant line like that. General motor. Okay. So general motor sell because 2023 increased by 38, now only increased by 10. It's very, very, very risky sell. Okay. So you want to take your money and run if you make some money. So probably the middle of fat, like mid fat starts. Okay. Next one. 222. This is what? 24. We look at that just now. What do we do here? Royal family increase. Also, we need to check the seasonalities as well, yeah? Like that. So it looks like it's a good buy in the mid-March, okay? For the royal thing. Next one. Beautiful Army was doing Boeing nice. Let's see. Let me see. Where's the percentage? Okay, 0.04 minus 5.46. Okay. I think okay. A loss of 5 compared to 4 cent. Okay. Expect a loss of 5 compared to a loss of 4 cent. What is 4 cent? Hmm. Okay. Expect a quarterly loss. Okay, it's a quarterly loss. Yeah, quarterly loss is not as important. I want a full year loss. Quarterly is really fine. We want a full year data. Okay, they don't have a full year data. I'm going to skip this just because they don't have a full year data. They say expect a quarterly loss. So release quarterly result. What I'm more interested is a full year result. Okay. Because if it is a quarterly, I have to do too much work. I have to go back every quarter for 12 quarters. Another one, 2 but well done, no? Your homework is beautiful. 11%. So how do you come with 11? 11 increase, also expect to increase in Q4 revenue. This is also quarter to quarter. Approve share buyback and stuff like that. Expect above is guidance. Okay, this looks like it's a quarter to quarters as well. Again, quarter to quarter is good, but I will need a lot more. So if you want to give me quarter to quarter, I want you to give me at least like what our beautiful Victor done. She literally just gave me quarter to quarter, write down really nicely like that in the past 12 quarters. Okay, I mean, you're doing really well. So just give me 12 quarters if it is quarter to quarter. So we can really see since the beginning of times, what have you been guiding me every single time you release your earnings? So we can actually compare that. Okay, you're doing so well. Synchrony, what is this? Short 15.2. These are all past tense feedback. All you've given me today is past tense. You're doing well, but we don't take past tense. So this 24, where is this? Let's look. Here. This is also past, oh, guidance. Okay, this is not past tense. Good. Minus 22.26. 22.26 is a past tense. We are comparing between guidance to guidance change. Okay. We are doing guidance to guidance change. Let me look at this. Expect 15.2. This is present tense. I like it. 23.9. This is our past tense. It would be nicer if it's guidance to guidance change. So it's a short. And it did look like a good short. Okay. I accept this. You can continue to do what you're doing because you are using a a guidance minus what already happened. It's not so bad. If you're using past to past, then it's really bad. I wouldn't be looking at it. But at least you have one guidance going on. So it's still acceptable, especially when the numbers is quite big. So it's still an acceptable short. We're gonna short this. Synchrony will be yeah, it looks like it's a good short at end of the February instead though. Synchrony. Let me go to synchrony real quick. Well done. Be back. I'm surprised you know how to do it. SCSYN. Yeah, like that. Hmm. Look like a new company. In the past 10 years. 15 revenue. Yeah, it was actually drop. Okay, let's just short it. Synchrony Financial. Now, sometimes you want to know that when it will come all the way down until, isn't it? So you go to the point where it's 15. So you will go all the way to 2021 because it's the same billion. Yeah. So 2021 will be probably just right here. Yeah. Probably just there. Just like that. 2021. Okay. Probably. You need to check the EPS. I just checked the revenue. You want to check the EPS as well. 7.67. Anyway, Synchrony Financial. Short because it went down 34% in revenue. You need to check the EPS. You also want to check go back to check how was the stock, how was the stock doing. Next one. Well done. Biba, you're doing so well. If you get to the next level, wow, you'll be even more powerful. This is only 8%. General motto was what? Wow, this is a beautiful person because he showed a layer bet. Look, six, six, seven, and then it went to what? Nine. Okay, let's look. And then and then um okay, 10 actually. 10 and then 11. Okay, we did that just now. Well done. Next one. J. Beautiful Amphenol. Let's look. Your calculation 0.49. What's 0.49? Let me see. Just give me a second. Oh, 0.49. Okay, it's here. Beautiful. Okay, this is a quarter to quarter result. I love that you've been doing you make it really nice like that. Well, very good. Minus 0.71. It would be nice if they give us a full year, isn't it? 0.49. Where's 0.71? Oh wow. You literally deduct from last time. Okay. Okay, let me read. 0.49 and then 1.82 and then 0.43 and then 0.79, 0.71. So it looks like it's all over the place for this guy, but it looks definitely looks down compared to up. Looking at seasonality will go up to middle. Well done. Wow, Jay, you're learning so fast. That's crazy. You're learning very fast, Jay. Amphenol. Amphenol looks like a cell. Wow, what is this? Are we looking at the same company? Since when? 24. Since when? 22nd. Okay. This is nice. Okay. So went down like that. Why is it like this? So what I need to do now, I need to compare in a proper way. Okay, there's a full year. Wow, they give us full years as well. Sometimes full year, sometimes not. Okay. Yeah, sometimes they give us full year. Hmm. You know what? I'm going to compare this full year to last full year. So this is 12.3, representative of 2% drop, 2.94. What about this? The full year is 14. So it's an up, representing an increase of 18% since over the last year. Okay. And then diluted expected representing a 20. Okay, where are we? 23 increase from the first quarter. Sales representing increase. So they are all increase 0.49 minus 0.7. When if it is increased from the first quarter here, how can it be an increase? No, expected in the range, an increase from the first quarter, adjusted to be in the range 0.71, like representing. Wow. Okay. So sometimes here, you want to look for the obvious one, when it's going up big time, going down big time, calculation is easy. This one looks like the calculation is a little bit complicated, but I'm very, very proud of you. You are able to make it like that, very clear. Yeah. Normally I would like, hmm, because this one says increase, and When we go there, it's actually not increasing. But anyway, seasonality says we are supposed to show in, let me see, middle Feb. Okay, middle Feb. So not there yet. Maybe we're gonna come back in the middle of Feb for this guy. But it looks like a beautiful short. Okay, it's okay. Middle Feb. Let's go to the next one. Top midday. 57, 57. Okay, this looks like another country. 65. 65. So you minus like that as well. Okay. Let me compare like this, yeah. 60, 66, 64, 65, 64, 57, 59, 57. Okay. There's not really a clear downtrend, but it did go down. Okay. It goes down by like a little bit. So it's a short because it goes down a little bit like that. Looking at seasonally drop at the start of week for about a week and then rise again. Okay, let's look at this novel thingy. Wow. Mhm. That's crazy. That's crazy. That's crazy. Okay, let's click short on this guy. Novo. Novo what? Nordis. To compare, I'll literally just put all the free cash flow out like that. I'll put all the free cash flow out. But the free cash flow looks like it's decreased by 2 billion. It's not too big, not too small, but I'm gonna copy and paste. Like it's not big, you know? It's not like huge. Wow, I can't even put it there. I would say 59 free cash flow to 57 free cash flow. Just like that. Okay. You have to back test a little bit more to see if it's really nice. Down a little bit. Okay. American Express, 15. Where's 15? Minus 12.6. Here, nice. 19% up. Wow. That's it shows that it will go up until mid-Feb, then take a drop. Okay. Okay, let me see. For the full year is 15. Last time the full year is only 13. So it was is revenue growth between 8 to 10%. It says here there. 8 to 10%. Last time was around 9 to 11%. Last year's 9 to 11%. So it's dropped by 1%. Last year's 15 to 17%. 15 to 17%. Where'd you get a number from? 15 minus 12.6. You don't have to go all the way back like that. You because it's a full year, you can literally just use last year, 2020-24. I will use the 15 minus the 13.75, and you will get just around 8 to 10%. Okay. They say the percentage to you, 8 to 10%. Okay. It's not 19%. The reason why you use 19 because you're using Q4, you're using the full year to the beginning of the full year. You don't have to do that. You have to just do the full year minus the last time full year. We normally choose whatever is highest. It's very difficult for you to understand now, but yeah, but because you make it so clear, so I can just use 15 minus 13.75 because it's same. This is a full year for 2022 and this is a full year for Q3. That means 2024. This is Q4. They're giving you the full year for 2020-25. It's a different year. Okay. So you don't have to go back to there. Quarter to quarter, maybe you can go back, but full year, you can just go to the previous year. Yeah. You're doing so well. Just a correction, just minus 13.75 rather than 12.6. More fiscal. Well done, yeah. More fiscal. So the reason why I wouldn't buy Amex is just because that last time was 11 to 10, 9 to 11. Now it's only 8 to 10. Let's get Amex. Like it's like going sideways, not too strong. If anything, it's coming down. Can you see? This is why I'm not keen. I didn't even put on the watch list. It's actually coming down because the growth for Amex is actually lower, but it has had a really, really strong growth. Will we short it? Not really. It's just dropped by 1%. We wouldn't short it. More fiscal, 8.2. Where's the calculation? Okay, here, 8.2 minus 6.9. You're using that as well. Yeah, you can use 8.2 minus 8.2 straight away. You realize that they didn't change their guidance at all. So the stock is actually same, maintain. They say outlook maintain. Okay. More fiscal. Sometimes some understanding is needed. Okay. Sometimes some understanding of why, because it's maintained, the stock digit just went down because we want things to go up. We want things to go up. Outlook to erase. Maintain is not good news for the market. Okay. United Airlines. 11.5. So because these students make it very clear for me, because obviously these students make very, very clear for me. So I can just pinpoint the mistake like that. Some people, if you just put two numbers for me, I cannot pinpoint the mistakes clearly. Why, Cheng? So yeah. So just saying that when we go through the homework, you still have to do your part of the job, the work. Because I literally just look at what students presented me. So calculation 11.5 minus 9. Let's get 11 is here, minus 9 is here. So what will be better? Just use 11 minus the 9. Okay, this is okay. This is acceptable. 27.7. You'll probably expect this stock to went up big time. Extremely conservative, even though it's so strong. Okay. United Airline should be going up really nicely. Let's see. 23rd is already at all-time high, just right there. Yeah. 27. P ratio 12. Nice. Normally airline P ratio is around like below 10. This is good. Um, what I need to go all in is to see, okay, this is 10, this is 11, and then this is 9, and it is going back to 11. So it's not a huge increase compared to what we have last time. Last time it's at 11. But it's definitely an increase though. It's not a huge increase, but it's an increase. I think this is the first year we have such a high issue date, 21st of January. Okay. Well done, Jay. Really well done. Harriet, let's look. Oh, what's that? Let's go, Harriet. I'm gonna go for a little bit fast now. 7.75 is, let me delete that. 7.75 minus 1.1. Hmm. Okay, 7.75 is here. 1.1 is here. Wow, what happened? It's dropped 65%. Bless this company. Polaris. Yep. So you're absolutely right. You need to wow, Harriet, you're doing so well. You're right. You need to have at least five, like 3 years or 4 years to see whether this down is always like that really nicely. Let's look at this. 0.9. So let's look at it's up and down, but it's definitely going down. Polaris. Wow. It's dropped 9% just like that. There's a support line here. Oh, what the season? When you look at the season, oh wow, I love that you have this one more year. Wow, Harriet, you're doing so well. I'm so surprised. You know how to do this. Well done. We have 10. So you can see, it used to be 10. It used to be up 3%. This is 2023. 24 down 15. 25 literally down 65. This company is gonna go bankrupt already, I think. Continue to challenge, production lower, profit. Wow, crazy. Let me write that down. Polaris down. I think we've done this before, I think. 65%. I think we've done this before, but when did we realize it's going down? I think since then, July. So I think when we do quarter to quarter, we kind of realized that before. Yeah. Okay. It's been on our watch list for the longest time. Well done. Next one, ASOM. We've done all of that. Well done, well done. Okay, there's the latest one. SAT 27, 21 minus 17. So I just need one more year. Otherwise, this looks like a goodbye. For the season there would be so nice. SAT. Which one? Wow, crazy. It's crazy, isn't it? If you want to learn how to read the guidance for this stock. Wow, you'll be a master of guidance. You will see that the guidance is always going up. Here it's gone sideways because the guidance is actually going sideways. So, okay. I just need a little bit more years. So far, we done it. Texas, what's the percentage? 12%. Yep. I love that you have all of these beautiful things going on. You're doing so well. Who is this? ASM, you're doing so well. You have all these beautiful things going on here, showing that this 12% drop is not a massive drop. Texas Instrument. This is a lot of AI thing going on. Wow, I love this. I love your calculation. Beautiful. Texas obviously is going to drop because of the AI and stuff like that. So you will see that it's been dropping since then. 24. So they're forecasting 94 cent, but other people are forecasting 1.17. Q1 0.94 minus 1.07. Okay, we just minus this like that. Okay. If you use Q4 to Q3, I want Q4 to Q3 again. So 9.67 minus 3.95. Okay. Yep. 12% is not massive, but it's okay. Let me see. At least it's still dropping and it's quite high. What's the PE ratio of this? Texas Instrument. Let me read it carefully, yeah? Look, 1.34, 1.62, 1.68, 1.3501. This is really bad this time. 1.6 up, up, and then down, and then continue to go down. Okay. Let's look at the revenue. 3.75, 3.94. Hmm. If I compare Q4 to Q4, 3.45, 3.75, 0.96, 0.94. So it's also less than last year. Texas Instrument. Wow, a lot of things going on. You guys found so many trades. Well done. This is 12% drop. You need to back test a lot more. What is this? United Airlines done it. SLY. What is this? 15%. 3 minus 2.6 is 15. And then 2.6 minus 2.5 is 4. They gave diluted and GAAP. You can choose one of them. This looks like a good buy. SLM Corporation. It's all-time high already. Yep. SLM Corporation. Just need the historical pattern. Would be nice. Cool. We've done all of that. Anyone else? Ben, did you do it? Wow. What is this? What is your calculation? Ben, you are doing really well. Just need to see where's the calculation. Is this one? So it looks like an up. 3, 3, 4, 4, 4, 5, 5.3. But compared to last time, it was up even more. Look, January last year from 4 to 4.55. This time from 5 to 5.3. So it's less than last year. Otherwise, we will go in and buy big time. Crane, let's have a look. Like that. 5.3 minus 4.4445. This is last year. 0.75. So 16% increase. What about this one? I will just minus the 5. Is it full year or is it quarterly? I need to know that number. Okay, you provide it here. Nice. Okay, let me read here then. Okay, so this is 4.55 and then what? 4.55. This is our January. Very difficult to understand what you just wrote. So 4.55, 4.55. This is 2024. This is 5.3. Anyway, I'm gonna put it on, but you have to do it because I cannot really read what you just put. You need to put it in an easy way for us to read, please. Crane holding. So, what you're gonna do, you're gonna check the guidance to see if it has increased before massively like that, okay? In the past 12 quarters, minus quarter to quarter like that, okay? You're doing well, but just minus quarter to quarter like that, or just put a number nicely. Is this a full year? I think so. So they keep increasing the full year. Hmm. I like your calculation here, but I want to know the calculation for this, the percentage for this, because we are comparing between that and that. Okay, we're comparing January and January. So I just need so you give me 16%. Very well done, Ben. What about this? What percent is this? Is it 16% as well? Yeah, that's just all I need. Well done. You're doing so well, Camila. 11% growth. Where's the calculation? I need to see the calculation. Here, over 10%. How much is 10% now? I need to see the calculation. But you're doing really well. Evolus 28 Boeing. Okay, let me look at Boeing. 20 minus 5.81. Where is all this number from? Okay, this one. These are not guidance. Full year is already happened. Financial result. These are all already happened. And we don't do what already happened. We only do guidance. Refuse to provide outlets for the second year running. Yeah. You want to have guidance. So this is not guidance. So we don't look at this. I think we done Boeing just now as well. So fine. Lockheed 21. Let me see. Analyst poll 27.75. This is only 27. You want to have both. Yeah. The dream to buy a stock, Fakana, or anyone who's listening right now, is that you want the company guidance to be even more than the analyst. Right now it's 27.75, so it's still less. So things should go down. But let me read this. 6. So how do you calculate? 22.31. You're using the wrong number. You're using already what already happened, reported. You want to use the guidance. You want to use, okay. 27 minus 22. Okay, I kind of accept that. But in order for you to do that, I need to see 2023 as well and 2024. Yeah. If you want to take it to the next level, you need to make sure you provide me at least 3 to 4 years one. You're doing so well. Keep it up. We've done general mode. Nice. J, we've done it. I think we've done everyone else. I'm gonna go through. I think we've done everyone else's. The last. If you want me to look at yours, just put it to the front, please. I'm gonna look at Yu Hang one. But we have so many, so we're not gonna look at Yu Hang's one today because we have so many choices already. Wow. Well done, everyone. That's it. Mm. You guys are doing so incredibly well. So if there's any lesson here, I'm gonna say to you, don't just use two quarters, don't just compare between two. Give me as much as possible, as many as you can, and you're gonna do so well. Okay? Give me as many as you can. 14 is good. What else? 51. What is this? This is so good. Why didn't one talk about this? 51 Caribbean. We've done that. I think we've done all of that already. 16 is okay. 32 was so far I've done it. Okay, we've done most of it already. Okay, well done. Yep. Provide me more than two quarters, please. So well done for everyone who do the homework. If you don't understand, that's fine. You understand it later on as well, especially if you're on the right mentorship training. So I want to say congratulations to Abbas. Long time no see. Adrian, where have you been? Adrian, you're gonna send me a text, Adrian, please. I also want to see your homework, Adrian, so we can take you to the next level. Adrian, Amin, Ben, Bavika, Bebek, Brendan, Bruno, Camila, Chad. Wow, Chad, nice to see you. Chi Hang, David, Chad. Who is Chad? Oh, okay, nice. David, nice. Dennis, nice to see you. Ace, Edward, Evelyn, Fakana, Harriet, Javia, Mario, Muhammad, Honora, Ren, Sarah, Suki, Theo, Victor, Vin. Well done. Long time no see. And thank you so much for your wishes, for your happy birthday wishes. You're welcome. Sorry, thank you so much. It's been nice. Cool. Hope you guys are doing well. Long time. Hope you are well. I've returned from the holiday. Nice, Chan. Nice to hear from you. Really good to hear from you. Ren with Mario. Thank you so much. Yeah, thank you. Fakana, you're doing so well. Nice. Thank you so much. Happy one. 21 plus. Yes, 1 year older. Incredible. This year, was getting a bit emotional when we were blowing a cake. I was actually not wishing for myself anymore. I was actually wishing for everyone around me to be to be healthy and long live and stuff like that. Yeah. So which is nice also to like people um to growth as well. Growth is really important. Remember the reason why we can live the way that we are living right now because we keep growing. So I want to say congratulations to a lot of you who keep on deciding that you want to grow, you want to invest in your education, you want to take it to the next level. So I'm very, 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 very happy to you, especially those who try to apply for your hand holding apprenticeship training. So well done for that. So thank you, Muhammad, Wayne, Evelyn, Asen, Victor, Bruno, Nora, Chihang, Amin, Fakana, Mariel, and Ren. Who is Ren? Adrian, speak soon, happy. Thank you, thank you, thank you, thank you so much. Thank you, thank you, thank you. You're doing so well. Speak to you guys very soon. Take care. Bye bye. Bye bye.